Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. Today I tracked the U.S. capital markets in the wake of digesting the Federal Reserve's new term securities lending facility. My first blip tracks U.S. Treasury yields and related market spreads. The one-day rise in yields resulting from the belief that the long-term securities lending facility would solve the credit crunch on Wall Street was short-lived. Yields declined, but Fannie Mae spreads widened on Wednesday. The bond conundrum will not end. Today I show the daily chart of the 30-year bond and the potential inverse head and shoulders bottom for bond yields. My second blip shows that COMEX gold and NYMEX crude oil are in bubble territory, the direct result of the Federal Reserve rate cuts. COMEX gold reached its all-time high of 998.3 this morning. Quarterly support is 856.5 with my weekly pivot at 981.9 and monthly pivot at 990.4. A weekly close above 990.4 should lead to a new high well above $1,000 the ounce. By cutting the federal funds rate to 3%, speculators were rewarded a license to push entity prices high at the expense of consumers. Back in January of 2007, I called the bottom for crude oil on CNBC as the 200-week simple moving average was being tested just below $50 per barrel. Earlier this month on Fox Business, I predicted that crude oil could test 109, but would have difficulty sustaining a trend above that monthly resistance. This morning's high at 110.79, so the bubble continues to inflate. My third blip shows that the dollar remains vulnerable despite stability on Tuesday. The prospect of additional rate cuts next week has the euro at a new all-time high at 1.5621 and the dollar versus Japanese yen below 100 to 99.81 this morning for the first time since 1995. Weakness for the dollar versus Japanese yen is approaching monthly support at 99.39. Weekly and semi-annual pivots are 102.68 and 105.86. My quarterly pivot is 1.5066 for the euro with monthly and daily pivots at 1.5462 and 1.5529. The euro bubble is inflating thanks to General Ben Bernanke. My fourth blip profiles the daily charts for the Dow Transports, the Dow, and the NASDAQ. For the Dow Industrials, I show daily and weekly supports at 11,907 and 11,841. The 200-week simple moving average is 11,495 with the 5-week modified moving average at 12,375. For the Dow Transports, I show monthly and annual supports at 93.98 and 43.98 and 42.67. with a daily pivot at 45.45 and a 200-day simple moving average at 48.15. The 200-week simple moving average is 42.11. A close below the January closing low for the Dow Transportation average, 41.40.29, confirms the next leg of the bear market for U.S. stocks. For the NASDAQ, I show daily and weekly supports at 22.04 and 21.61, with the 200-week simple moving average at 22.58. The NASDAQ is below its 200-week simple moving average for the first time since mid-August 2004. Join me this evening on Right Side Live at 6 p.m. for our Traders Club chat. Send your comments and questions to support at rightsideadvisors.com. That's today's 4 in 4. Enjoy your day.